Hey, what's going on? Dusty. Today I'm going to show you guys how to document your trading. Okay, I've been trading for going on almost 4 years now, and okay, across these 3 and some change years, I've picked up a lot of experience. Um, okay, so with this experience, I'm happy to share a lot of what I learned over the time that I've been trading here on my channel. It's a good way for me to document things, not only for entertainment purposes for you guys to watch, but it's good for me. You know, my my mode of thinking is if I can organize my thoughts in a journal, and if I can effectively show what I'm thinking to the masses, then that one allows me to prove that I know what I'm talking about. Because if you can teach something, that shows that you understand something really well. So if I'm able to teach trading, I'm just able to prove to myself that I know what I'm doing. And that's, you know, one thing that I've been doing this for a while. I made a lot of mistakes in the past. I'm starting to finally find my stride as a trader. Um, let's talk about some mistakes I made in the past that I've since fixed. Um, Okay, one of the mistakes that I used to make is over glorifying the short-term results. So this could happen in kind of two really dangerous things. Um, the first way is you have a bad trading day, um, and you respond to that negatively. And some negative ways to respond to a bad trading day. Everybody has losing days. Okay, losing is a part of the trading game. Um, you know, you should be trading with a strategy that has a proven edge so that you don't have to worry about the losing days, okay? Because they happen for everybody. Um, and everybody wins and lose trade. Even the worst traders in the world can place a really big, nice winning trade. So what separates the best traders from the average traders are their ability to respond positively to losing days. And in the past I overtraded. Okay, blue prop from accounts. Got margin called by revenge trading. I did it all. So having some some type of system in place to stop you from you know over trading, that's going to be important. Um, okay, but let's get into today's. Oh yeah, then I was going to say the other flip side of responding to things in the short term is say you have a good, nice winning day. Okay, something that's bad is to take a picture of how much money you made on the trade, right? Maybe you take a picture of the chart and say, "Wow, look at this big move I caught." You know, yeah, look at this chart right here. I mean, let's just say, for example, you caught like a buy position right here, and you caught like this entire move up. Let's just say, for example, you caught, I'm drawing this like long position. Let's say, you bought here and caught this big move up. Um, this is on the micro, this is the euro dollar futures chart. Okay, you know, like I said before, the best traders in the world and the worst traders in the world, they're both capable of putting on winning and losing trades. So, this is a very good trade right here. Let's say you caught this, okay? Um, you know, what you don't want to do is take a picture of it and then post it all over social media. What are you doing? Yeah, sure, maybe you made a lot of money in one day, but okay, let me tell you something. I've been doing this for going on 4 years now. Um, it's about the bottom line. What are you taking home at the end of the month? What are you taking home at the end of the year? You gotta have a long-term perspective when it comes to this trading stuff. Okay, so with that being said, let's get into journaling. Okay, because journaling is gonna it's gonna keep you in the mindset of thinking about the long term. It's gonna, um, so okay, so right now, when I went to school, my high school and middle school, um, we used a lot of Google products, right? We used Google Classroom. Um, when we worked on assignments, we went on Google Drive, made documents, did school assignments on Google Docs. Um, so I'm kind of used to doing everything Google. I know Microsoft Excel is really good. I'm just familiar with Google. And okay, I just recently really started to do the KISS method. KISS, it's an acronym. Keep it simple, stupid. Um, so I'm applying that logic to my documentation, and at the time of this recording, um, I didn't place any trades today because I didn't. I just didn't place any trades today. But it's Monday, April 28th, and the month of April is coming to an end. And I started trading this month on a live account. Um, so this is my first month of trading, and it's not that great. Um, you want to, when you're trading, you want to record everything. Yes, you want to keep it simple because you need to be able to understand it. Um, but you want to keep track of a lot of things. See uh, what type of style best fits you as a trader. Um, so I'm going to go ahead and log into my trading account just so I can see. Um, all right, so right now I'm logging into my trading account just so I can kind of keep track of my P&L. Um, you know, it's about what you're making at the end of the day, um, not on a trade by trade basis, but really a week by week, month by month, year by year basis. So keeping track of how you're doing month by month, that's what you want to do. I was thinking of calling it quits or whatever. So I just logged into my trading account on TradingView, um, and right now I'm at my I got a trading account with $3,646 in there. Last time I updated the journal, I had $3,200 in equity. So it seems like I had, since last time I documented, I, grew my account for $100 or so, which is good. But, one thing that keeping a active journal on a spreadsheet is good for is you can really organize and keep track of what you're doing. And, I hate to admit it, but on the 9th of April, that trading day, the US stock market saw it was a green day for the stock market, and I was shorting the heck out of NASDAQ futures. Yeah, that was I could go back in time and see what pair or what instrument I was trading. So when you document, you want to keep track of everything. What time of day, the time of day, time of month, time of week, and are there news releases? Those are very good things you want to document because time is a really big confluence when it comes to trading. You want to keep track of how much you're risking, okay, because you want to be consistent. So time, how much you're risking, what's your P&L? How much are you bringing home at the end of the day? Did you, hold onto your take profit? Did you panic sell out of position? What did you do? So, as this first month kind of comes to a close, I'm kind of lost about $2,000 this first month, and altogether I had $5,400 in my brokerage account. Not all at once. I deposited $2,000 here, $500 there, another 500, da 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 da. Up until the point where I had, an accumulated $5,400 deposited. But I got margin called, on the 9th of April, and it sucked documenting that. Let me tell you, it sucked because I had to write down in my journal my losing trade, and I just wanted to forget about it. When I lost that trade, I just wanted to forget about it, move on. I wanted to revenge trade to try and make back my losses. Um, and right, you know, I also have this is my trading journal where most of the stuff is quantitative data. The terms we're just dealing with numbers here. But I also have a qualitative journal where I just here, I'm not going to actually open it because I'm quite personal in it, but it's my journal diary. And kind of like Diary of a Wimpy Kid, it's really just a diary. I, talk about my day, talk about trading, how my day went at work. Something that ticked me off, I'll put that in the journal. Something good happened, something positive happened, I like to put that in the journal too. And it makes you more round as a person. Um, if I take it back to when I got margin called on the 9th of April, well, I've been trading for so long. For me to make a mistake like that, so it's unexcusable. But okay, let me tell you guys something. It doesn't feel good when you make trading mistakes like this, right? I got margin called because I took a position. I took a short position, and everything was telling me that my short position, my idea to go short became invalidated. It was a bad idea to go short because the market was just going up. But I didn't have the stop loss. I didn't know at the time. I didn't connect my trading account to TradingView. And even when I did learn how to connect my trading account to TradingView, I did not know how to submit take profit and stop losses orders. So maybe I'll do a video on that, how to update positions on TradingView, because it's really easy. But if you don't know how to do it, I mean, I would just ask why. You're here to trade. You should know how to. But journaling your trading, you're gonna learn a lot from it. You're gonna see where you went wrong, but you're also gonna see where you went right. And back testing is gonna be another part of the journaling process. It's its own separate thing, back testing, but back testing is where you're gonna want to find your edge. So journaling is just literal proof of how your edge works. And let me tell you something. This month of April was my first month trading. I wasn't even using a strategy. So I'm going to be building a strategy soon. I know what I'm looking for in the strategy. I just don't have the hours. I don't have the data back tested yet to have a set in stone strategy. So that'll be for a video in the future. I'm going to explain how to create your own strategy, and I'll review my strategy too. I'm a trader with not even 5 figures. I'm not funded. My personal account is very, doesn't have a lot of money in it. So, um, you know, I got nothing to lose sharing um, my experience, my knowledge here on the internet. So, here we go. So to update your journal, okay, you want to keep track of everything. It's hard to start. Starting is the hardest part, but once you get started, the next hardest part after getting started is staying consistent. Okay, a lot of people give up, right? Say they make a stupid decision, dumb decision by revenge trading. Say they make a dumb decision over leveraging, revenge trading. Said that already. Holding on to losers, just like I did. Say they make a dumb decision. And you know, some people like to give up after that. Hey guys, this trading stuff, it's not for the weak. You don't want to, you know, if you give up, you're just forfeiting what you potential profits in the future. Who knows what'll happen if you stay consistent with this. But you don't just want to stay consistent with this. You want to be methodical. So if you're going to be consistent over time, you want to do it right. Okay, do it right or do it twice. That's something that I tell myself. And right now I tried the right way. Okay, uh, so um, here we go. I want to start to update my trading journal here, and I'll just put in the last trade. You know, um, I like to update the journal as I'm trading, so I'll maybe fill in, say, uh, so on this April 22nd, I placed a trade on MES, which is the micro version of the euro dollar contracts. So I'll fill it in as I trade. The last thing I'll fill in is usually the results, where I took profit. Um, but you could also go back in your trade history on your broker and fill it in that way. But it was my first month doing it. Really, this whole journaling thing. So I got to figure out what I like to document and what I don't like to do. And yeah, the hardest part is honestly just staying consistent with it, because I could see that I took some trades on the 24th of April that I did not put on the journal. And okay, I'm only going to suffer from that because, one, if I'm not journaling to the fullest extent, I'm really just wasting my time because, okay, then what I'm journaling, the results just aren't to be trusted because they're not the real results. So you wanna take it seriously, but keep it simple. Stupid kids, remember that. You want to keep it simple. You keep overcomplicating this. It's just gonna make this already hard thing even harder, right? Trading's hard, so you don't want to make it even harder on yourself. You want to keep it simple and allow your edge to make you money over time. So it's going to be too much work for me to go back in time and fill this stuff on in the trading documentation, right? It's going to take too much time. I'm just going to go ahead and write my, what I'm going to do now is I like to kind of take things month by month. And since this is my first month trading, this will be my first time doing it. So I'll kind of put here, it's just for the date, I'll just put the last day of April, just 4/30. So I'll write down the date, 2025. For time, I'll just do 11:59 because the next minute would be the start of the new month. And for equity, I'll just write down how much I have, 3,646. And 10 cents. I'll just throw that in there. So percent change. So this is going to be a tough one because, I had a total of $5,400 deposited into that. So, that's about $1,800 lost. Let's see how much percent I lost. Most of this is from my margin call. My margin call trade lost me $2,230. So, so if I were to just take away my margin call trade, I would actually be up $500. Let's say I put a stop loss on that trade, I would still be up probably at least $100 after my first month. So looking at it in that perspective, it's really encouraging because it shows that, hey, I just gotta fix a couple errors that I have in my trading, and I'll be a profitable trader. So this is, a clear example um, of how journaling is going to help you. Okay, I can see that, hey, I'm a good trader. My biggest downfall currently is I'll have 1 or 2 days throughout the whole month where I just let it go. So, so maybe I gotta have something in place to stop that. So something simple, throw a stop loss on every trade I take. Bam. Now I'm not gonna take I'll still take losing trades with a stop loss, but I'm not gonna take excessively large losers and that's a good thing because I find out, hey, these excessive losers are really negatively affecting my equity curve, how much money I'm taking in at the end of the day. So, so that's something good. Um, so yeah, I mean, I lost 33% pretty much first month. Hey, not bad. Could be a hell of a lot worse. Um, all right, so 5,400 minus, 3,646, 1,754, minus 1,754, yeah, these are losing numbers that I'm looking at. It feels bad. It's a good thing that I'm documenting so that I can, you know, I'm motivated now to do better. So I'm going to be coming into March with, around the range $3,400, $4,000. Best case scenario is I'll have more than that at the end of the March or at the end of the next month. And, um, the sooner you start documenting, the better. Okay, it feels good to look back in time, and if you're a good trader, it's even going to be if you're a bad trader, but you're documenting, you're going to see a lot of the mistakes you're making on the journal, and it's going to motivate you to not make those mistakes anymore. And if you're a good trader, you can, and you're seeing positive results in your journal, it's going to motivate you to continue doing what you're doing. Keep on killing it in the game. Um, so this is the end of April here. I'm pretty much done documenting. I'll update my spreadsheet here should I place any trades between now and the end of the month. And that's very likely. I'm looking to play some trades, play some longs, you know, uh, on euro dollar here. Um, but should I place any more trades, I'll just go ahead and throw this on in the trading journal. And this trading journal is a really good reinforcer. It's really going to help you in your trading career. So, Doozy Dusty out. This is day one in journaling. Keep it simple, guys. I mean, this is a longer video than I should have made. I could have made this video a lot shorter, but okay, that just tells me that I got more to work on. So keep it simple, stupid. Um, stay consistent, guys. Consistency is going to be the key. If you take a day off, make it worth it. Okay, don't, keep it simple, guys.